All right. Hey, everyone. Thanks so much for tuning in. Today, I'm very excited to have Alexis Ochoa with me here today. And Alexis is with New York Life. And Alexis is an expert in long term care insurance. And when I talk to a lot of people who do like home care or who are in assisted living communities, they all talk about how really, really expensive it is. And they show me the numbers, and I'm like, oh my God, that's pricey. How do people pay for this? And then they say, well, some people have long-term care insurance, but it's actually not very many people have long-term care insurance, but a lot of folks should. And actually, surprisingly, it's not that expensive, not as expensive as I thought it was going to be. So Alexis, being an expert in this, is going to help us understand what is involved with long-term care insurance, how much it costs, what it pays for, best strategies, how it ties into life insurance, and all of that. So Alexis, thank you so much for joining me here today. Really appreciate it.
Yeah, I'm glad to be on here, Sebastian. Like I said, having long-term care is important. Not a lot of people have it, but a lot of those people who don't have it now, 80, 90% of those will eventually need some kind of care in the future. So starting early is always important when considering the cost of care and who will take care of me when I'm older.
So when we say starting early, how early are we talking here? I mean, do people get long-term care insurance when they're in their 20s, or does early mean like mid 50s?
I wish people would start early. I know I did. I The earliest age you could purchase it is actually 25. I turned 25 last year, so as soon as I turned 25, that was the first thing I did right after my birthday. Got myself a long-term care policy. That way I know something happens to me, my family is not burdened with having to take care of me, having to worry about where will I be taken care of. So it's as early as 25, but typically the recommended age for those who are kind of holding off on a bit is about 40, 50. That's about the sweet spot where the premiums are still rather reasonable.
Right. And then is there a maximum age at which you can purchase long-term care insurance?
Yeah, so typically maximum age is from 75 to 80, depending on the product. But typically it's between 70 to 75 is the maximum cutoff.
Is the maximum you can get it. Okay, and so I always hear like, you should buy it earlier rather than later because your premiums are going to be lower. So if you start at like, just say 25 versus starting at like, say 65, like what's the cost differential? Is it like if I waited 40 years to get it, is it going to be 10 times more expensive than if I had bought it 40 years ago? Or how does all that work?
Yeah, so price takes two considerations into account. One is age. Uh, no matter what, we're always going to age. We can't stop that. You buy long-term care at 25, it's cheaper than if you buy when you're 26. Another one is health. So, in order to qualify for long-term care, having decent health at the time of purchasing it is very, very important. Long-term care is one of those products that only about 70% of applicants get approved, sometimes even 65. So starting early is very, very beneficial. Obviously, premiums are much, much lower. You lock in your rate. And one of the best things about us as New York Life, we are a mutual company, the top mutual insurer in the country. And with us being a mutual company, we pay a dividend every year to our policyholders. And for our long term care, after you've had it for 10 years, that's when the dividends will start to kick in. We start paying dividends into your policy. And what that means for you, that means that your premiums will start to go down after 10 years. So the earlier you start, the longer chance, you'll have your long-term care in place and your premium will start to go down as you age. So you purchase it when you're 25, by the time you're 35, whatever you're paying X amount will start to go down every year after that until it reaches the bare minimum of usually about $8 a month, $10 a month, sometimes even 15, depending on how much coverage you got. But over time, the earlier you start, the less you'll pay down the line.
So, Alexis, you're blowing my mind here because I had always thought that premiums go up every year. Like my health insurance premium goes up, my home insurance, my car insurance, those premiums go up every year. I thought the same would be true with long-term care insurance. That's not true. You're telling me that like if I start buying my premium, like I'm 55 in a couple days, right? So it may be too late for me, or is it too late for me? Right? If I were to start paying right now, is there at some point where my premium would start decreasing, or How does all that
Yeah,
work
so
exactly?
let's say you're 55, you purchase it today. By the time you're 65, you'll start receiving our dividends, and those dividends will help bring your premiums down every year after that. So let's say you're paying X amount, 200 a month, 100 a month. Once you receive that dividend, the price will go down to 91, 92. The year after that, it could go down to 84, 85. Each year, you just see your premium drop, drop, drop until it's at a really, really reasonable level where you can keep paying for your long-term care. Because obviously, the most important thing for us is to make sure that our clients can keep paying for this long-term care. Because unlike life insurance, where eventually we're all going to pass away, it's bound to happen. For long term care, we're all eventually going to need some kind of care. We just don't know when. So we want to make sure that when it does come, you have that policy in force and it could take care of you. That's why we put this dividend into our long term care to make sure people can afford it, even when they're receiving retirement benefits, Social Security, their 401k, to make sure it's still in place when they need it.
Right. So now, long-term care insurance isn't just for age-related infirmity, right? Like you're in an assisted living, or you need somebody to care for you 20 hours a week or whatever. It could be because you got in an accident or had cancer at a young age or anything, right? It's any kind of care that you may need. It's not necessarily because it's for something that is only related to aging. Is that true?
Correct. So for long-term care, industry wide, to start receiving benefits, it's when you cannot perform two out of the six daily living necessities or activities of daily living, ADL. And that would be bathing yourself, dressing yourself, feeding yourself, so being able to eat on your own, using the restroom, moving around, so walking, and the other would be transferring, getting, out of bed, standing up, getting up from a couch. As long as you can't perform two out of these six, that's when your long-term care benefits will kick in. So like you said, let's say you get in an accident, you have some kind of chronic illness where, you can't walk anymore and you can't get out of bed. That's already two out of the six, and your long-term care benefits will start to pay out.
So let's just say that you're in a car crash. You're in a car crash, and like you're in a coma, or maybe you're not in a coma, but you're like, like you can't really, you're in a full body cast. Let's just say, right? I mean,
Right.
then you can't do any of those six activities, right? So long-term care insurance would care for you for 6 months. What would it cover? It wouldn't cover like medical bills, would it? Or what? Or would it just cover? What exactly would it cover in a situation like that, where you're like in a full body cast for 6 months?
Yeah, so typically long-term care helps cover the cost of receiving care, whether it be the medications you receive or a caregiver going to your home or being in a facility. It covers any costs relating to not being able to perform two out of the six daily living necessities. So let's say you got in a car accident and you're in some rehabilitation home, right? They charge whatever they charge monthly, daily, yearly. Long-term care will begin to pay out whatever, depending how your policy is designed. It will start to pay out your daily maximum, your monthly maximum to receive care in that facility or whatever services you receive. So, whether it be someone coming in to help you move your legs around, being fed at the facility, helping pay for the food, whatever it might be, your room in that facility or at home, it covers all costs related to whatever you can perform. So whether you can't wash yourself, use the restroom, walk, transfer, it covers, any and all costs related to receiving care for that.
But not like medical care. So if you had to like go to the doctor during that time or have a doctor come to you, it wouldn't cover that. But you did mention medicine. Does it actually cover medicines?
So it covers some sort of medications, as typically medications that help cover those like daily activity.
Like maybe
Uh,
non-prescription medications like
right.
Tylenol
Yeah.
and
Yeah. So let's
kind of
say,
oh
yeah.
right.
So let's
It's
say,
not gonna
sorry, go ahead.
it's not gonna cover your life-saving cancer drug.
Right. Yeah. 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 Even though long-term care is considered a health insurance, it's primarily used to cover the cost of receiving some kind of care. So, let's say you're in a home, they give you some Tylenol, they give you some Advil to help relieve the pain. that would cover it. But let's say they prescribe you this medication for cancer, that would be a whole completely different related that
Right.
would go your health insurance.
Right. So let's just say that I'm not going to be in a full body cast for 6 months, but like for 6 years, or like an extended period of time. I mean, like, how does it work in terms of caps, right? I assume these are not unlimited, right? There must be some kind of limits that are applied to these. Yes?
Right. So when you do decide to apply for long-term care, it's very, very customizable. You're able to say, I want to have this much in my policy pool. So each policy will have a pool of money. So whether it be 200,000, 400,000, 600,000 of total money that you have within your policy for the policy to remain active. And you also choose what's called a benefit period, an estimated amount of time that your policy lasts if you were to receive care, let's say 5 days a week throughout the year. You can design it to where you say, hey, I want to make sure if I need care 3 years straight, that my policy will last 3 years. Or if you say, I want to just have care for 2 years, 3 years, it all depends on how you design your policy. So, one of the best things about us, a lot of times people might be on a budget starting to get a policy. They're like, yeah, I want to get long term care, but I can only put so much each month. With our long term care, every year the company will send you an offer allowing you to increase your benefit over time without having to prove any additional insurability. So let's say, hey, I get approved today, but I just have a budget policy for now. 2, 3 years from now, I can substantially increase that without having to show any proof of insurability.
Okay. So you can do that once a year. That sounds cool. So, but like you said, there's a pool of money, right? So, like, I just know that this is all very expensive, right? So, it could cost, six, seven, eight, $10,000 maybe a month, depending on the level of care that you need. Well, 10 times 12, let's just say, is $120,000. If my pool is 600, that means I only get 5 years of care. So, what's the biggest pool you can possibly get? I mean, do they go into the millions or
Yeah, I believe the biggest pool maximum was about 1.25 million max. So
1.25
that's
million?
correct, yes. Because when you design a long-term care policy, there's what's called a daily maximum. So your long-term care covers a daily cost. So let's say it costs about $400 at the facility you're at, but your policy maximum is $500. So you're not using the full amount of your benefits, so it's guaranteed to last a little bit longer. But once your policy, pool depletes, drains, that's when your, long-term care policy is typically over. But typically, when you do go through some kind of long-term care event, it's usually never permanent from, statistics. Typically, men will need care for about 1.6 years for some kind of chronic condition where they need care. And for women, it's typically about 2.5 years. So, a lot of times people won't always need care. Sometimes they only need care 2 times a week, 3 times a week, maybe 4 hours a day. So you're not using the maximum amount of your policy. So it's guaranteed to last much longer. So, let's say I have a 2 year policy with 300,000 policy benefit pool, but I only need care once a week, twice a week. It's guaranteed to last longer than those 2 or 3 years. As long as you have money in your policy pool, it's guaranteed to last until you basically deplete it or drain it over time.
Yeah, so that sounds like an actuarial table right there. Do you ever actually talk to any actuaries? Like, do they actually have you guys get together with actuaries and they explain all that to you?
No, not recently. No, not from
Recently,
not from the time not from the time I've been here
I'd
that I
like to
know
meet
of.
an actuary. That just sounds like an interesting line of work because you say men is 1.8 years and women is 2.3 years. It's like, how do they know
Yeah,
that? But okay, well, let's just say though that I get a policy and it's like 500 grand, and then like I'm in my 30s, I get in a car wreck, and I'm there, and like I need 6 months or a year of care, and I drain down my pool, but then I'm out and I'm fine. Is there a way to top it up? Or is this like a lifetime pool that once you've set it, you can't really improve it after you've made a claim?
yeah. So it's typically a lifetime pool. Going back to your example, let's say you only need care for 6 months, 7 months, and you're like, okay, I'm better, I'm recovered. Your policy is still in force. Um, if you're still receiving offers from the company, you can still increase your benefit pool, but you typically can't say, okay, I want to purchase additional coverage. You're only limited to what's called the inflation option. So like I said, it's either the offers or it's automatic. You're limited to those. But let's say, you do go on claim 3 months, you didn't end up using all of it, but you're like, okay, this was helpful. I want more. You can still get more as long as you're still receiving your offers or you have the automatic inflation increase.
Right. Do you find that people get like secondary long-term care insurance policies from other carriers? Is that even permitted or is that not permitted?
Yeah, yeah, that's permitted. I believe people will typically have two. So
Oh,
once
people
they
typically
drain
do
one,
have two long-term care insurance policies.
yeah, yeah, for those who kind of plan ahead, they'll have two. I've
Huh.
never seen people have three. But you can have two different long-term cares from a different company.
Oh yeah, like
As long as you're. Mhm.
you might have like an employer plan and then you get your own
Right,
plan, that kind of thing,
right,
right?
right,
And
yeah.
then when you leave your employer, you can keep your old plan going and get a new plan. So you mentioned at the beginning that there's like health requirements in order to get long-term care insurance. What kind of like how do you get disqualified from getting long-term care insurance? What kind of things disqualify you?
Right. So, unlike life insurance, where typically you need a medical exam, for long-term care, 99% of it is strictly medical records, medical history. So, what the company would do is they will look into your medical records. And what the underwriters typically are looking for or determine is how likely is this person to go on claim. Just like any other insurance, just like life insurance, you apply, they see that this guy smokes a lot, he has the habit of going skydiving or scuba diving, whatever it might be, so he's at a much higher risk. So, same for long-term care, the higher risk you are, the higher likely you are to get declined. So, let's say you have cancer and you apply, typically the approval is fairly low. It has happened where some do get approved. It really just depends on their medical records, history, what treatment they're undergoing. But, as long as, you're living semi-healthy lifestyle, no serious medications, you haven't had to need some kind of care in the past, there's a much higher likely chance of you getting approved. But, it's all about medical records and current medical history.
Okay, well, just if you had to like ballpark that, right? Like, let's just say you're taking applications from 10 people. What percent of them are going to get declined, do you think?
Yeah, I would say maybe 20%, 25%.
20 or 25%. Oh, wow.
Right.
Okay.
Yeah. I have had clients in the past to apply for it. You know, as an agent, you don't question their health. You're like, hey, so you're pretty healthy, no conditions. No, I'm healthy. I run. I do this X and that. But obviously, once we do get a declination, as agents, due to privacy reasons, we don't see why. But it's all about what's inside, not really what's outside. So we might feel good, but we never know what's going on inside our bodies. So that's typically why a lot of people get declined. Sometimes they don't even know why they got declined, and that tells them, "Oh, it turns out you have this condition," and that'll kind of open their eyes, like, "Wow, I didn't know I had this." So sometimes it's helpful to get declined because it kind of tells them something they might not have known before.
Right. So like how about like high blood pressure, diabetes, which are rampant, right? I mean, like if you
Yeah,
have either or both of those, I mean, you don't know, but is that what they tell you? That means you're more likely to get declined or because that's just so common, right? I mean, way more
yeah,
than
yeah,
20% of people have high blood pressure and or diabetes, right? So
right, yeah.
does that mean that you can't get it or would that impact how much you're going to pay for your policy if you do get approved?
It won't really impact too much about what you pay. Um, you know, let's say you do have high blood pressure, diabetes, but you've been controlling it. There's history of you taking medication. Your condition has not gone down. It's been level or it's even improved. Uh, Likely, out or not, the company will either say, okay, we're going to approve you, but we're going to limit the coverage we approve you for. So let's say I applied for a $300 daily limit, but now due to the underwriting where we approved you, we're going to limit it to 150 a day or 100 a day, and your policy pool will go down a bit. They'll still consider and accept you. You might just have more limited options.
Right. Okay. So you mentioned medical records, and but you also mentioned like skydiving and whatnot, which is not a medical record. So do they
Yeah.
like add like a bio on you or something like that? Because like what if I
Oh,
like
okay.
drink a lot? Like I've never been to like I mean like I never go to the doctor, right? Like I don't really have very
Right.
many medical records, right? To look at, right? But who knows what kind of high risk activities that I might have? How do they know what your other high risk
Yeah.
activities might be?
Yeah. So that one I always joke around with my clients. So after you do an application for long-term care, the client will do a part two. So they'll receive a questionnaire in their email where it will ask them basic medical questions. So, current medical history, how much do you weigh, how tall are you? And there's a section where it asks you, do you plan to go scuba diving in the next 12 months? Do you plan on going skydiving? Do you plan on doing X, extreme activity? And a lot of times I tell my clients, the underwriter's job is to either decline you or approve you. So the less we give them, the better. So, you know, even if you are planning on maybe going skydiving 6 months from now, it's on your bucket list. If you're not planning on it in the near future, and I always tell them if there's no record of it, it doesn't exist. So whether you're planning on going to or not, I always recommend clicking no on those questions because we never know what activities we're going to perform. But if there's no record of it, I always tell them it doesn't exist. It gives you a better chance of getting approved.
Well, how about
We
like
look
like
at the
skiing,
underwriter.
right? I mean, skiing, that's
Uh,
dangerous, right? I mean, skiing
um,
or
yeah,
motorcycle riding. I mean, is that a question? Like, do you ride
yeah,
motorcycles? That's a
yes,
question.
that
How
yeah,
about
that's a
like
question.
bicycles? Because bicycles, I think, are even more dangerous than motorcycles. But that's a,
Surpri-
a healthy thing, right? If you ride your bike,
yeah,
you're probably going to not have as much as a frequency of heart attacks or stroke, I would guess. It's a healthier thing. But does that kind of thing, is that asked about or does that count against you?
for riding a bicycle, it doesn't pop up. It's considered form of exercise. Same with skiing. Surprisingly, I haven't seen that pop up. It's typically just more extreme sports. So skydiving, ATV riding, scuba diving, the
How
whole
about
nine yards.
surfing? Surfing, that guy just got eaten by a shark here not too
Surfing,
long ago.
yeah, I saw that. That's scary. Surfing, I don't believe so. I haven't seen it on there. But there is an additional tab where you can put additional activities. There's an other tab. So you could say, hey, I surf. Hey, I'm a underwater welder, whatever it might be. Like I always tell them, if there's no record of it, doesn't exist. Let's play it safe. Let's get you approved first. Once you're approved, there's no contestability after 2 years. So, let's say you get approved, the company finds out after 2 years, oh my God, he skydives. There's not really much the company can do because after 2 years, there's no contestability period.
No contestability after 2 years. Okay, that's very good to know.
Mhm.
All right, so getting back to this issue of like a daily draw and like a total money pool. So are these tools that you can use to like adjust the premium that you're going to pay, right? So like I
Yes.
mean, I assume if you have a smaller draw at a bigger premium, that means a longer number of years. And if you have a bigger draw and a smaller premium, a smaller pool, that will mean
Mhm.
a shorter number of years, possibly. Are these going to affect how much you're going to pay, and like how much can you affect your payment? Could you like double or triple, or like or cut your payment in half, or even make it a third by having a smaller payout and a bigger pool? How can you play with that to like make it more affordable?
Right. So to adjust a premium, many different factors. Obviously, the benefit pool. And the benefit pool is typically affected by the policy length. So there'll be a 2, a 3, a 5, and a 7 year. And depending what option you choose, that will give you your benefit pool on top of your daily limit. So let's say it's from 100 to 500. Before it was 400, but we actually increased it to 5 because we see the cost of, you know, living is going up. So depending what you choose there, that will affect the premium. One of the things I like telling people is if you're married, you already qualify for a 25% discount because when couples apply together, they receive a 25% discount and that lowers the price even more. So, adjusting the policy pool, adjusting the daily limit, and potentially applying together with your spouse that will help you in the long run with your, your premium.
Right. But let's just say that you're single and you want to, like have like a big pool and a smaller, daily payout. I mean, is there a way you could like cut your payment in half? I mean, like, I guess my question is like, is there any way to like significantly improve the affordability of that, or is it not really much of a delta? Right. Like I might be saving, $10 a month, but like cutting my benefit in half. Is it really extreme, or is it pretty nuanced?
Yeah, I mean, $10 won't affect it too much. The smallest increments you could do is your daily maximum. So you could do 100, 110, 120, 130. That will affect, smaller amounts of premium. But like I said, I always recommend people, if they want to start off low, they can, because over time they can increase their benefit pool. So, starting low, not a big issue. You have the option to increase it at a later time, but you also have the option to customize it to your budget. You know, you got a daily maximum of 175, but you want your policy benefit pool to last 7 years. That can determine the right premium for you. Or let's say I want a policy maximum of 500 of $500 a day, but I only want a lifetime maximum of 2 years. So you can play around with the numbers to fit your premium and what you think your needs will be down the line.
Okay, so you said the maximum right now is $500 a day, right?
Correct.
So is that indexed for inflation? Like if I lock that in right now today, 10 years from now or 20 years from now, $500 a day is not going to be the same 500 bucks that it is today. Is it go up automatically or no? Because you mentioned I can increase my premium, my pool, but does my maximum daily limit increase automatically or never?
So once you lock in your policy limit, it's locked in within the contract. So like I said before, it was at 400, which is why we recently increased it to 500, not too long ago. But that was typically within like a 15-year range. So about 15 years ago, the max was 400. Now we increased it to 500. But once your daily maximum is locked in and your policy is approved, it's in force. That's something you can't really change
You can never
unless you.
change that.
Correct. Yeah. The only thing that you can affect is your policy lifetime maximum. So
Right.
you can add what's called an automatic inflation protection, where every 2 or 3 years, your policy benefit pool goes up about 2 or 3%, trying to go along with inflation. So your daily maximum might stay at 500, 400, but your policy pool will start to increase over time, trying to track
Right.
inflation.
So that might be why people get a secondary policy, right? If you're locked into that $400, right? I mean, and if you're really smart, you did it a long time ago, right? I mean, so you're not going to be, you might be like it could be 30 years ago, you got $200 a day, and that's nowhere near enough today, but you're locked in, right? You can
Right.
increase your pool, but not your daily. And so that might be one good reason why people would then get a secondary policy, I guess, or possibly even a tertiary policy, although you've never seen that before. So, well, that's very interesting. And also, when I talk to people who are like in the assisted living, business, they'll say people never expect that their long-term care insurance is going to pay for all of their care, right? So, what have you seen people doing? Do you see people typically not expecting to have 100% of that covered? Do they think that Social Security or like a pension fund or something like that is going to make that up? What do people do for planning purposes? Do people plan it's only going to cover half or two-thirds or three-quarters of their cost, or what do you see out there in reality?
Yeah, so going back to that question, when I encounter someone and I ask them the most important question, when you do need some kind of care, who's going to take care of you? Typically, they say, "Oh, well, my family." And then going back to what you're asking, well, do you know how much it costs if you're to receive care? And they say, "Oh, well, I'm not too sure." But going back to your question, you know, a lot of times people aren't really in the know about how much care costs. Um, which is why every time we sit down with them, we always make it transparent. This is how much costs, sorry, this is how much care costs in our area. And seeing this, we can design a policy that you don't have to worry about not being able to afford it when you do need some kind of care. We can kind of tailor make it to what is the current cost in our area, Or if you tell me I want to receive care in a different state, we can calculate how much coverage we recommend for you. If you plan on moving states, if you plan on, moving cities, we can pinpoint what the cost of care will be. But, a lot of times the long-term care is covers a good amount of care. Almost even all of it for some people. Like you said, if it's $500 a day for 30 days, that's about $15,000 a month. That's well more than enough to cover, a studio bedroom, even a caregiver to come to your house without having to really pay anything out of pocket.
Right. So, where can I get this care? Like, what if I wanted to move to Mexico? Because in Mexico, I would get like amazing care for like $300 a day, right? Is that a possibility? Can you go to Mexico and have the bill sent to New York Life back here, or it has to be somewhere in the United States for you to get care?
Right. So, getting some kind of international care, there are not really restrictions, but there are more limitations depending on what country it is. I'm not sure about Mexico off the top of my head, but typically your policy benefits are more limited when you go to a different country. These plans are more designed to receive care in the United States. But let's say you suffer some kind of event outside the country, you can still receive, proceeds from New York Life as long as, in a different country, you can provide proof that you are receiving care in a facility or a caregiver and you show them whether it be receipts, admission into some kind of facility. As long as you can provide proof of that, you'll still receive benefits from New York Life, but typically they'll be limited depending on where you are.
Okay, well, that's very interesting. All right, now I understand that you have some facts and figures you can share with us. Could you pop that up on your screen and
Yeah,
take us through some of the numbers that you oftentimes go over with your clients?
yeah, of course. Let me share my screen here. Screen. Okay. So the first thing that I really want to go over is the cost of care in our area. Let me go back here. Delete. So obviously we're in California. Our region is the San Francisco, Oakland, San Jose area, and this is a daily rate for care. Let me go back here. So receiving some kind of care in our area, a lot of times people don't really think about it. Um, Let me go back here. Sorry, the lights just
Oh my
turned
God,
off.
home health care, limited practical nurse, $1,400. Alexis, if I only have $500, which is your maximum, I'm in the hole, 900 bucks a day,
Right, and this would be for a licensed practical nurse. So at that
all day
point,
long,
yeah,
20,
at that
24
point,
hours a
yeah,
day.
yeah, that's more of a we need to monitor you because if we don't monitor you for a certain period of time, it could be life threatening or not. The nine times out of ten, the kind of care people do receive with long-term care is a caregiver, home health aide. So typically the daily rate for our area is about $323 a day for a
How many
caregiver.
hours is that? I mean, that's not 24 hours, right? What is that? That's 12 hours or something like that, or less. Is that 8 hours?
Yeah, so typically the cost of a caregiver is about $30 to $50 an hour.
Right.
And like I said, people typically don't need care all day. Sometimes they still live at home with family, but they hire a caregiver just to kind of help them out of bed, make them breakfast, help them use a restroom, maybe wash them up. And by the time people come home from work, let's say 4 p.m., 5 p.m., caregiver did his job, the family kind of takes over. But
Right.
this is typically maybe a 6 hour day with a caregiver. And like I
Okay.
said, you can receive care in a facility or at home. They cover both.
Right.
So that's for a home health care. I'm going to show an assisted living facility. So, I'm sure many of you have seen a assisted living facility when you're driving by in the area. And a lot of times people will be admitted into a room. So these are what the rooms cost. So in an assisted living facility where there's typically caregivers, a one bedroom is typically about $8,200 a month. So considering that, that will help you consider what kind of policy you should get. So whether it's $400 a day, $500 a day, you can calculate how much you need to receive a one bedroom. And typically care facilities include this is kind of all inclusive. like between 8 to 10,000. Includes food, it includes the bedroom, it includes whatever amenities are at the facility. That's all typically included in the price. Obviously, each facility is different, but from experience, it's typically just this is our cost a month. You get your room, you get your food, you get your caregivers, and this is like the flat rate you'll pay
Yeah, so that's $275 a day approximately is what you
approximately.
show as average. But I think it's important to note that that is oftentimes like with a low level of care, right? So if you need like like a treatment plan essentially that go on top of that, it could easily go up from there. And if you do need a treatment plan, like I don't know what kind of treatment plan you might need, but let's just say it's another $1,500 a month, so you're, or maybe just 1,700, so you're up at $10,000 a month at that point. That's still covered, even though it's like a treatment plan of some kind. That's semi-medical. Is that still covered, or is that something that health insurance would have to pay?
Depending on what kind of treatment it is, whether it's more medical, surgical, more medicines that are prescribed to you. Um,
Well, like if you have diabetes and they have to change your wound care all day long, right?
oh
Or
yeah, 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 that's included.
oxygen, or like giving you medications, and you need to have that done by a nurse, right? A licensed practitioner of some kind, right? I mean, that kind of stuff would be covered by long-term care insurance. Is that correct?
Correct. Yes. Yes. As long as it's, related to your care, whatever amount occurs, New York Life will basically, pay that facility or pay that provider, the amount that's due. Typically, for long-term care, it's based on reimbursement in uh, our policy. So, you show us the receipts of the care provider received. New York Life will send you a check to reimburse you for those receipts or for that care.
Right. So is that how it works? Do you normally you pay it yourself, and then New York Life pays you back? There's no way for them just to bill New York Life directly for your care?
Yeah, there's a way. Depending on the care facility, so you show a care facility, hey, I have this long-term care policy. Depending on the care I receive, you can give me a receipt of what it would have cost, and they'll send me, New York Life will send me the money, and I'll pay you guys the amount. But they always send you the money for the receipts we show the company.
Got it. Right. And so a lot of these people, they don't, they're not like a cash on demand, right? Normally it's like
Yeah,
you can
like
pay them
like
like
they
a,
know.
right.
Yeah,
They got it
like
figured out.
yeah, like they work with a lot of long-term cares. For them it's beneficial. They know they'll receive a check every month for this person receiving care. So they're
Right.
pretty
Yeah.
flexible. They'll give you the
They're good.
receipts of how much, yeah.
So if it is $10,000 a month, that's $333 a day, and it sounds like that would easily be covered by a lot of long-term care insurance, right? So
Right.
$333 a day times 365 days a year, that's 121,000, like you were talking about before, basically a year. So
Right.
and the average amount of time in like assisted living community is only like what, 3.5 years or something like that? Is that about
Yeah.
right?
Yeah, like typically for men, it's a little bit over a year, 1.5, 1.6 years. For women, it's typically a little bit over 2, 2.3, 2.4. Obviously, depending on the severity of care, but these are the average statistics for both men and women.
So what
Um,
do you see in terms of like what's the typical amount of coverage that people actually end up getting? I mean, do people I mean, you said they go up to 1.25 million. Probably sounds like
yeah,
almost nobody would get that. What's kind of common for your
yeah,
total pool and your total daily limit? What does that look like for your average Joe Schmo in the Bay Area?
yeah. Obviously it depends on budget, but let's say someone's middle class, getting by pretty well. I always recommend get at least a $300 a day, $350 a day just to kind of cover this statistic of an assisted living facility. And depending on benefit pool, I always like to ask them, you know, would you like to receive care for 2 years, 3 years, 5 years, 7 years? If they really don't have an answer and they ask me, what do you recommend? I always recommend going with the 3 year. Like I said, especially if you're a man, you're likely only going to be there about 1.5 years. So get a 3 year. That way, if you go through claim, you recover, but you go through claim again, you still have another year and a half of policy that you can use. And at the same time, you purchase X amount, $350 a day now, and you have, let's say $500,000 of your policy lifetime maximum. Over time, you can increase that policy lifetime maximum. So, you can start at this amount now, but over time, it can grow by itself, or you can decide to upgrade it at a later time.
Okay. Now, what about these hybrid life insurance slash long-term care insurance policies? What's the deal there?
Yeah. So there's different kinds of hybrid policies that include a life insurance benefit attached to them. So, first and foremost, it's a form of long-term care insurance. You need some kind of care. The company will, reimburse you whatever care you receive. At the same time, there will be a life insurance attached to it. So typically, it's not in the big numbers. It might be even a $60,000 policy attached to it, a $50,000 policy attached to it, and the long term care will also be limited because it's trying to be two products in one. You're kind of getting a bit of everything, not at the maximum benefit you could receive, but you kind of have a good mix. But typically, when you start using your long term care proceeds, your life insurance benefit proceeds will start to go down as well. So, let's say your policy lifetime maximum is 100,000, your life insurance is 50,000. You use 40,000, you'll have only $10,000 left of insurance, of life insurance, and you'll have still about 60,000 of long-term care. So, having it is good if you want to have a life insurance policy attached to it, but you might be limited in how much policy benefits you will receive.
And do
Unlike
these have like a cash benefit like some of the life insurance policies do, or no?
So for these, if you it does have a cash benefit, you could theoretically take money out, take a surrender, or take a loan. But one of the riskier things about this is since it is what's called a universal life policy, where the premiums are never really guaranteed. You have to pay a certain amount, and as the cost of insurance goes up or down, your
Oh.
premiums will be affected. So, imagine you start taking loans from this policy, you likely have to start paying a higher premium.
Oh, interesting. So these have policies that do go up as opposed to a standard long-term care insurance policy where the policy cost goes down after a number of years. Is that the deal?
Correct. Correct. That's
So who
depending on.
who
Go ahead.
gets these then? Because like a small, like you're saying, okay, it's $100,000, like life insurance benefit. That's not a very big benefit. So who typically gets these hybrid policies?
Right. So for those hybrid policies, I typically only really recommend it for more wealthy, high income earners. The reason why is you can fund this policy in one lump sum. So
Oh,
you can dump in, let's say, 100,000, 200,000. You'll have a long-term care benefit of 1 million, 2 million. You might have a life insurance policy of 100,000, 200,000. But you just kind of dump in a certain amount of money, and you're guaranteed to receive those proceeds at a later time. It's
oh,
for those who kind of want to dump in now, forget about it, and when they need that care in the future, they have a huge pool of money they can use.
all right. Okay, that makes sense. All right, terrific. Well, Alexis, this has been very informative, and I know that a lot of people are probably going to be really interested in getting some long-term care insurance because, like, it doesn't really sound that expensive, doesn't sound that hard to get, and yet potentially extremely valuable because all of it's not a question of if, but when, so long as we
When?
live long enough, we're going to need this. So I'm anticipating that people are going to want to reach out to you. What's the best way that people can get a hold of you to talk more about this offline, as you were?
Yeah, right. So the best way to reach out to me is my phone number. So that phone number is 408 At the same time, you may look me up on Google. You could type in my name, Alexis Ochoa, New York Life. All my information will pop up, my email, my phone number, even my fax. That's the best way to reach out to me. And like I said, all the meetings are complimentary. We don't charge for our time. We'll make a solution that fits your budget, your needs, and we'll walk through you through every step, even through the underwriting step. Even through claims. A lot of times, We help you with your claims. We might even refer you some caregiving homes that we work with. So, you're never alone. You never feel that you have to call a 1-800 number to file a claim. We're always there for you as agents.
Okay. And you are here in the Bay Area, but do you work with people coast to coast, or do you have like a particular geography that you work in or can only work in?
Right. So, I'm based out in California. I'm licensed to sell in California, Hawaii, Washington, Texas, and Minnesota. So, if you are countrywide, we can work with you. All we have to do is just get appointed, get a license, and, we can help you in a different state. So, we're not just limited to one state. We can help in all 50 states in the country.
Right. So if anybody anywhere is watching this, and let's just say you are in Kentucky, you could go still call you, and you'll be able to hook them up with a provider.
Yes, yeah, someone who has their Kentucky license who can help you will refer you right away.
All right. And New York Life is in all 50 states, I assume, right?
Yes, correct.
Not just New York and California.
Yeah, correct. Yeah.
All right. Well, Alexis, thank you so very much. Before we wrap it up, is there anything that I didn't ask you that you want to make sure that people understand about long-term care insurance?
Yeah. So one thing, like I said, is the very important questions to consider. One of those is, when you think about receiving care, who would you like to be in charge of your care? Whether it's a caregiver, someone would you have to hire someone? Second question to consider is where. A lot of times people love receiving care at home. You feel safe. You're in your own place where, your family lives, your spouse lives. But, you might consider a nursing facility as well. Obviously, the solution would be a long-term care policy. And, the fourth thing to consider if, you haven't shopped around for long-term care is how will I pay for my care? Will I pay out of pocket? Do I want to pay the, almost $6,000 a month average, or would I rather have a policy that kind of pays that for me? So these are just some things to consider if you're kind of on the fence about it. It's always the who, where, and how.
All right. Yeah. And it's never too early to really start thinking about that because you never know when you
Correct.
might find yourself in need. All right. Well, Alexis, thank you so very much, man. I learned a ton, and I really appreciate your time. And I will catch you on the flip side.
That sounds good. Thank you so much for having me, Sebastian, and I wish all of you a happy week.
All right. See you later.